Hello and good morning. Welcome to the first session of the day. My name is Rainer Axter. I'll introduce myself in a second. We would like to talk today about the innovative instruments for green financing. We're here at the IDFC Pavilion at COP in Glasgow. Entrance seems to be difficult, so the live audience is a little scarce, but looking forward to introduce all of this with the colleagues here online. I'm Executive Board Member at Adelphi. We are Think and Do Tank from Germany, supporting the IDFC Climate Facility and the coordination unit of the IDFC Climate Facility with capacity building, with support, with the implementation of the work program. And this facility, I have been asked by TDB, together with KfW, the organizers of this session, to moderate this session, and I'm very happy to do so. What is the session about? From our perspective, it's a question of impact at scale. Climate finance is a hot topic, it's an important topic, and if the world community would like to deliver on the greenhouse gas emission reductions and on adaptation finance, there is a necessity to have more money going into the market, more impact being created with that money, and from our perspective, multilateral, bilateral, and national development banks will play and do play a key role in this. Because if there's one thing banks are good at, is getting a lot of money into the market, and that's what's needed here, with experience, with facilitation. There will be some new ideas needed, and I think we are here to discuss some of these new ideas, maybe tweaks of existing instruments to move forward and to deliver an impact. So what we like to look at today is impact, is scale, and private sector participation, because there's a lot of interest, I think, of everybody to have the private sector on board, but we all know that it's quite demanding. So let us, without much ado, go into the presentation. We have three panelists here. It's Mr. Admasu Tadesse. He's the President and Group CEO of TDB. We have Mrs. Barbara Schnell. She's the Director of Sector Policy from KfW. And Mr. Bastien Pedossa. He's the Head of the Financial System Division at AfD from France. What we will have is that each of those will introduce several financial instruments they're using. There will be a few follow-up questions on it, and then we will move to the next speaker. And in the end, we will have a more general discussion around these topics: impact, scale, and private sector participation. To start off, I would like to invite Mr. Admasu Tadesse to give his introduction. He is a banker who has been with TDB since 2012. And I think it's quite impressive to see that the investment grade ratings and the assets have grown 8 times since he went to the helm of TDB. So an 8-fold increase, which is chapeau for that. Before that, he was working for the Development Bank of Southern Africa as an executive vice president. So he has a lot of experience, and TDB works in 22 countries in Africa, which, of course, is one of the important continents to look at when it comes to climate finance, for mitigation, but also for adaptation. Mr. Tadesse, Mr. President, please introduce us to the new ideas which you bring forward from TDB.
Well, thank you very much for the kind introduction. I trust you can all hear me. I, first of all, must say that we're very pleased to be partnering with the IDFC Club, both KfW and AfD, in this exciting discussion. Clearly, we know that the challenges of green finance, climate finance in the African setting is quite pronounced, and it's not any different from the challenges we face in many other SDG financing areas. Most of us who follow the financing challenges in the continent will know that whether you're talking about infrastructure, agriculture, trade finance, or other sectors, there's always talk of lots of gaps. I think what's very interesting in the green finance area in Africa is that actually you can take an integrated approach and also simultaneously address some of the other issues that are being dealt with. Of course, we do know that there's a special case for much stronger flows to be made available to Africa, given the fact that it contributes so little to the global carbon dioxide emissions problem, as we've seen from many different authorities that have quoted how Africa is, of course, the smallest part of the challenge in terms of at least emissions. Of course, the question then becomes, how does one mobilize? How does one make the case to obviously increase the envelope size? We've had a great run in recent years where we've managed to strengthen and establish also new partnerships, specifically with KfW Group and AFD, but also with the European Investment Bank and the World Bank Group. But all of this has been to raise special purpose financing to help bridge the gap on the climate finance side, the green finance broadly. And we've been successful. One of the things we've realized is debt finance, that aspect of the resource envelope, is not really where the crux of the challenge lies. There's really a big problem upstream in terms of developing projects that can actually be structured to absorb all this debt financing that's being created. So there's always this issue of upstream challenges, right? Where you need to do feasibilities, pre-feasibilities, a lot of institutional framework matters that arise when you're looking at really getting transactions ready to go. And then, of course, there's the bigger matter of risk capital. So just referring to what we've managed to do with seamed money, we've managed to raise a lot of debt finance, but we've come up against a different constraint now, which is risk capital. So we've now discovered that there's a new opportunity to put forward a new instrument that would help deal with the risk capital side of the equation, because clearly we know that the debt finance side is no longer the constraint. And so what we've done is we've managed to make some changes to our constitution to introduce a new instrument, which we call Class C shares. And there's a number of varieties around that specific offering. And this is a particular instrument that's targeted to institutional investors. Of course, DFIs can be part of it, but also very much impact investors, sovereign wealth funds and pension funds as well. And what it essentially is it's a senior instrument for institutional investors to participate in our capital and enable us to grow 3-4 times what we would normally have been able to grow if we were just using debt capital in a very classical sense. So really, this is the innovation that we're very excited about. We found a number of new institutional investors who've showed an interest now to come in and boost our capital structure where the constraint actually lies. And the beauty of the whole value proposition is that it's on a risk-adjusted basis, quite interesting to institutional investors. You get the triple bottom line effect, but you don't have to go into the very hard area of putting deeply concessional or grant funding on the table. So this is the kind of offering that should be more amenable to institutional investors that cannot actually give away grants. So I thought I should maybe kick off at this stage and then come in for some interaction in the next round. Thank you.
Thank you, Admasu. Maybe first follow-up question. You talked about the scale. So what kind of scale do you foresee until 2025 to be achieved from your perspective with these Class C shares?
Well, the bigger gap is in the hundreds of billions. I think we hear of all sorts of analysis and statistics being quoted from different institutions. So the overall gap is very, very big. But we've just had a recent capital increase of $1.5 billion, and that is an equity capital raise that we're trying to do, and a large portion of that will be themed capital. It'll be green finance together with SDG finance as being the theme to it, and there might even be possibilities to negotiate and not just do full equity or full risk, but it could be partial risk. So it would be a hybrid type approach to the same instrument. It would still be an equity and a risk capital type of offering, but we're also looking at hybrid options as well. We've had full approvals from our various stakeholders, so really we're ready to go with this. And the scale you're looking at in the first round of a few years would be up to 1.5 billion, and then that can be scaled up 4 times. So you're looking at $6 billion. But then in addition to this opportunity, we do have a new special purpose vehicle that we've created, which is called TDF, the Trade and Development Fund. And this is a very versatile fund. It's also intended to be able to resource and attract instruments that would be very, very well suited for green finance interventions. And that one has no limit, really. I think if African partners like the European Union, the German government, or any specific OECD public sector player wanted to really help us gear up this specific vehicle, we would be able to absorb billions, really. And then that of course, would have to be fit for purpose. So it can't just be hard money or sort of commercially orientated capital that requires a financial return. It would have to be much softer. But the harder stuff, I think we could easily take $1 billion, frankly speaking, without having to worry too much about absorptive capacity.
And let me ask a second follow-up question, because you just talked about the upstream challenge. As Adelphi, we do a lot of technical assistance to financial institutions, and we always see this challenge, actually. The pipeline is one of the key elements here. You addressed the topic of feasibility studies. So would you expect then a TDB also to come into this area, paying for these feasibility studies, or would there other actors to be needed to support that, so there's more interest from the upstream for these kind of investments?
Well, that's an excellent question. That's actually a challenge we've been trying to grapple with, both at TDB level, but at the industry at large. It's quite well known now that is one of the big constraints. We've tried to position ourselves to make more of a contribution in that regard by, again, creating special purpose vehicles that can actually attract much bigger funding to be able to. So in short, TDF, the Trade and Development Fund, that's part of the TDB group, is now in place, and it will be able to absorb different kinds of soft funding, concessional finance. It could be reimbursable grants. There could be, for instance, a solar power project that would need some early stage studies and analytical work and modeling. And that could be paid for. And then if the project actually goes forward, that can be reimbursed back to the fund. And then that same money would be made available for another deserving project. So we have that kind of revolving fund that we've got in mind. And of course, it requires a certain amount of risk appetite, because this is not typical debt, right? Because it's clearly risky. You might end up investing anywhere between 5 and 10% of the total value of a project in upstream work, only to discover that it's not gonna go, and you need to be able to walk away from what you spent on that kind of intervention. That's the part that makes it quite hard. There's also other complications that arise around feasibility, pre-feasibility type work, which is really the question of, the procurement aspect. I mean, if it turns out to be feasible and ready to go, then the players who played a key role upstream to unlock that possibility expect to be involved, right? And then there's a question of, how they would be able to secure a place for themselves downstream, because sometimes procurement would have to happen, and the people who spent all that money up front may not be in a position to have the opportunity to proceed with. So there are some of those aspects that can be addressed as well. But generally speaking, this is a certain kind of funding that needs more flexibility and more risk appetite, so that it can help unlock deal flow. We're ready to contribute more to our own fund as well from our own resources, but of course we need partners, because the amounts are quite big.
And one more question about the sectors. So what kind of sectors do you foresee that a lot of the work or a lot of the investments will go into?
Well, I mean, there's two specific sectors that are always going to be the big ticket sectors. Clearly, power is one of them. And that's also particularly the case because the backlogs are huge. Access to energy, access to electricity is so low in Africa. You're looking at well under half of the African continent that's not connected to electricity. So, there's this huge ramp up that's going on, and so that's going to require a great deal of funding. I think the opportunity to the international community is really the leapfrogging one. where countries like Kenya and Ethiopia, of course, have shown that there's so much renewable energy opportunities that can be harnessed to help deliver this power, and to do it in a manner that actually sidesteps what most of the industrialized world has done, which is really to go for the cheapest stuff that is not clean. So we have very, very attractive sources of renewable energy, geothermal, of course, we know all the others, wind, solar, and the like. We see a lot of opportunities for us to go into power, help deal with the mainstream SDG gaps, but do it in a manner that also addresses the pertinent issues around climate. And so that is one sector. The other one is transport resilient infrastructure is going to be very, very key. We see mega railroads now being put into place that rely on electricity. If that electricity is green in nature or not emitting carbon dioxide, I think that would be perfect transport infrastructure to begin rolling out en masse. And then that would be very attractive as well in terms of, meeting the transport requirements of Africa, because again, like power, there's huge gaps, but to be able to do that in a manner that doesn't contribute to the climate issues.
Thank you very much, Admasu. Let me turn now to our second speaker, who's also virtually present, Mrs. Barbara Schnell, who is the Director of Sector Policy. She has been with KfW since 2001, and she has worked in various positions nationally and internationally. Most namely, she has been responsible for the financial and private sector development in Asia for a number of years. She has also worked before her career at KfW for JP Morgan and Dresdner Bank in New York and Frankfurt. Barbara, you're going to tell us more about the different instruments KfW, some of the instruments KfW is looking into to deliver impact at scale and getting private sector on board. Please, Barbara.
Yeah, thank you, Rainer. Yeah, today I want to shed a light on our activities, first in the green bonds sphere, then second in the climate risk insurance sphere, and third, actually connecting to what you explained, Mr. Tedesse, de-risking the finance for sustainable energy in Africa. So let me start with KfW's green bonds activities. As you might be aware or may not be aware, KfW is one of the largest leading promotional banks. We are owned by the German government, given our size and mission. On behalf of the German government, we promote small and medium enterprises, also venture capital in Germany. We have always funded national programs supporting energy efficient housing, for example, and renewable energy. We support municipalities and university students in Germany with dedicated loan programs. But we are also engaged in global project and export finance. And last but not least, we do development finance and development cooperation on behalf of the German government. So for our activities, of course, we have to raise significant volumes in funding in international capital markets via bonds. And just to give you a feel for the volumes, we currently issue between 80 and 100 billion euros worth of bonds per annum. And therefore, knowing the investors' needs is critical for us as an institution. And as a consequence, it was also a strategic goal of ours to become one of the leading issuers of green bonds. So far, we have issued a total of 37 billion euros, and in 2021, we plan to issue 10 billion euros. And so far, we have succeeded in doing issues in 11 different currencies. So we have a good grip of our investor base when it comes to these green bonds. So approximately 35% are asset managers, including insurance companies and pension funds. Approximately 40% are dedicated green investors who focus on socially responsible investment. And the remainder are mainstream investors approaching this asset class. So most of the bond volume, the green bond volume, is actually absorbed by private capital. So the proceeds of the issuance of green bonds are used to finance two of our German programs. That is renewable energies, so photovoltaic equipment, onshore wind power plants, hydroelectric power stations, generation of and use of biogas, for example, and energy efficiency in the building sector. So KfW's green bonds fulfill market standards, the green bond principles, and we will have to work towards EU green bond standards, which are part of the EU taxonomy. So now we are exploring ways to transfer our experience and knowledge in green bonds to the cooperation with our partner institutions in Latin America, Africa, and Asia. So we use different instruments and develop them further for our partners to help them in their endeavors of issuing green bonds. So we have, for example, anchor investors who can buy green bonds. And this contributes to an increased trust of other private investors. There is a good example for this, the LA Green, which is a green bond fund which invests in Latin American green bonds and combines public and private capital. And so far, we have the EU and Germany invested as donors in this fund, and we would like to invite other partners to join because this fund actually has a target volume of $500 million. We provide partial guarantees for green bond issues, and we plan to actually engage in performance-based payments that incentivize higher climate impact targets or more complete reporting. So with our institutional experience, we will also want to offer technical support to our partners as well, specifically for the purpose of getting into the field of issuing green bonds. So secondly, what do we do for climate risk insurance solutions? And yeah, both of, like all of the activities I'm explaining or showing to you is always the ultimate goal is to get the private sector engaged in these activities to find good ways of actually doing public-private partnerships. So the situation for climate risk insurance is that the frequency and severity of destructive weather events has increased significantly over the last decades. And of course, we know that the losses to go with them have really increased significantly as well. And this trend will stay with us. And developing and emerging countries are the ones to suffer the most, and they often cannot cope with the very detrimental effects. So traditional risk-sharing mechanisms and social safety nets fail because the scale of the problem is so huge. So insurance is one element to mitigate the situation. And why is that? Because insurance payouts reach people much faster than emergency relief. And insurance can incentivize people and countries to make good plans beforehand. But we only have limited access to insurance in developing economies due to a high risk perception, poor infrastructure to measure the weather events, high transaction cost, and limited experience from insurance companies in these markets. So we need to work on enhancing the product offering in these markets. So the Insel Resilience Global Partnership, which is funded by the German Ministry of Economic Cooperation and Development, our German ministry we work for as KfW Development Bank, has enabled KfW to develop a cutting-edge project portfolio in the field of climate risk insurance and disaster risk finance. We were able to test and pilot good programs. That has actually enabled us to take a leading role in strengthening climate resilience by providing equity, loans, technical assistance for the development and marketing of climate risk insurance products. So currently we have 12 projects in our portfolio, and we have invested in total 250 million euros, mainly in equity and grants. The objective is to reach micro, small and medium enterprises, as well as low-income households with an effective risk cover against extreme weather events. And I want to highlight that with the Insel Resilience Investment Fund and the Natural Disaster Fund, which are two pioneering examples of public-private partnerships. The funds develop innovative products for financial institutions to offer to these clients I just mentioned, and insurance companies and governments. And these funds are backed by reinsurance companies from the big names we all know: Swiss Re, Munich Re, Hanover Re, who cooperate on these ventures with us. Yeah, and in my last example, I would like to describe a mechanism by which we want to support private investment in the African green energy sector, and that is the African Energy Guarantee Facility. Yeah, and Mr. Tedesca has just pointed out that Africa actually contributes only very little to the emissions thus far, but the appetite for energy, the need for access to energy, of course, will increase significantly. So our actually mission is to help African countries to in an effective transformation towards a green energy path. So the problem this facility wants to address is the lack of appetite for project financing of green energy projects, while there is an obvious demand and need. So we want to address these problems by providing partial risk cover. The risks associated with renewable investments in Africa are manifold: political risk, policy and regulatory risk, off-taker risk, grid and transmission risk, and so forth. The investors and lenders are particularly sensitive, we find, vis-à-vis political risks. And we have found insurers not equipped to offer mitigation solutions that are sufficiently attractive. So the risk cover we offer is donor funded, and we have quite a few stakeholders on board. The EU, via the European Fund for Sustainable Development, EFSD, provides a guarantee for the KfW and the European Investment Bank. And we use this cover to guarantee the private reinsurer Munich Re. So in essence, public donor funds share political, sovereign, and sub-sovereign risk with, for green energy projects in sub-Saharan Africa with a private reinsurer. And eligible investment sectors include all the ones Mr. Tedesca just mentioned. And the impact we are hoping for is that the additional reinsurance capacity will actually enable primary insurers to find it much easier to serve the market. And the enhanced insurance coverage will hopefully support the mobilization of private finance for investments in sub-Saharan Africa in renewable energy generation, energy efficiency, energy access. And the expanded access to clean energy has all the economic benefits we all know. And we strongly incentivize primary insurance to develop also an environment, social and governance policy and management system based on international standards. Yeah, so much for that. Back to you, Rainer.
Thanks, Barbara, for this introduction to these three instruments. Let me ask a follow-up question, especially in regards to the private sector participation, since you mentioned that on a couple of occasions. From your experience, which of these instruments which you presented is most attractive to the private sector, and why?
These instruments actually target very different private sector activities. I mean, the green bonds intends to mobilize private finance for sustainable investments per se. So that's very attractive to all institutional investors. The last instrument I just showed or I explained is very much targeted to insurers which are active in the African market. And the climate risk insurance initiative is also very much geared to the insurance and reinsurance market. So it's a bit difficult to ask the question which one is the most attractive. It depends on what the investors are really interested in, focused on, and how they actually target their activities per se.
Thanks, Barbara. If you look at the overall activities also of KfW in creating more green finance and creating more green markets, what do you see what the role of KfW is, and where do you see it evolving into in creating more markets?
Yeah, actually, our role increasingly turns into an enabler of public-private cooperation. And if I would like to exemplify this by the climate risk insurance example, which I gave. How can the private sector come in? The private sector can actually invest in the funds we created together with our partner donors, like the Resilience Investment Fund. The British are invested in it along with us as a German donor. And other investors can come in and provide their capital for these funds, for this fund. The fund actually invests in companies who have a business model which is geared at providing product development components which are necessary, essential for providing insurance products in these markets. Like, for instance, they enable to use the data you need in order to actually monitor the weather and then decide whether you have a payout event or not, just to give an example. And it brings in the reinsurance capacity from the private sector. That's the third level of private sector engagement. And these different components of private sector engagement are enabled by the facility we created. And it's a matter of devising these concepts and inviting the private sector to come in, and also understanding, okay, what's the risk appetite, what is their need when it comes to the business model they have, what can they get into, what do they expect from the public sector in order to enable this public-private cooperation.
And how does KfW as an organization act as a green bank? I think I will be interested in that as well, because it's also like, I think that's questions often asked here at COP especially. If I tell people we work with financial institutions, they say, yeah, but financial institutions all evil. I don't think they are all evil at all. So, but how does KfW as an organization act as a green bank?
Well, that actually allows us to have a little peek into German politics. But the German government has requested us a while ago to become a truly transformative promotional bank. And as an important step towards this goal, we have integrated the idea of sustainability into our bank's vision, and that's the entire bank I'm talking about. No, not only the development cooperation, because there, of course, sustainability, the SDGs are our core mission. No? But the banking group as a whole, of course, serves other interests as well. The sustainability is at the core of the bank's vision, and so we have 3 pillars. The Agenda 2030, we have mapped all our promotional activities to the SDGs, and what we have learned, you can actually see that on the website, and what we have learned that currently we serve mostly the SDGs around energy, sustainable economic development, cities, and climate. And there was actually also 2020 with the pandemic, actually changed the focus of our portfolio quite a bit. And based on that knowledge, we plan to develop and implement a comprehensive set of impact indicators for all of our financing activities, including export and project finance, and corresponding metrics. And the goal is of this exercise to steer all of our financial decisions based on these set of indicators, the metrics, and then targets attached to that. Second, Paris compatibility. There it's a bit more straightforward. We want to support the transformation towards a greenhouse gas neutral future. And we want to achieve a greenhouse gas neutral portfolio by 2050. The government has actually adjusted their target to 2045. As you can hear also at the COP in Glasgow, we pretty much stick to that target, and we want to invest systematically in transformative greenhouse gas neutral technologies. And we have sector policy guidelines, and also difficult ones, not on steel, automotive. We want to have a pathway which is transparent to everyone, how we can reach also this greenhouse gas neutrality in the future. And this is actually a true challenge. And the third pillar is the ESG risk management. We want to introduce stress tests for our portfolio as to climate, as to biodiversity. And all this goes also hand in hand with what the EU regulators also ask from us, EU taxonomy. And it's quite a challenge. There's a lot of work ahead of us, but we are dedicated to actually fulfill these targets. And I'm sure they will also be adjusted as we go along to become stricter and stricter.
I can hear there's a lot of demand coming towards KfW, and I think with the new government in Germany, it might even increase, I could see. So I'm wondering, since we also work on the topic of technical assistance to partners, and since IDFC is a club, where does KfW support the partners in increasing their activities in green finance? And if you can share maybe also which ones of those are popular with the partners? I think that's always the big question as well.
Well, yeah, TDB, we have a strong partnership with TDB. Just to give you that example, with CAF in Latin America, we have many activities going on. I could mention a lot more. And when it comes to what's most popular with the partners, I think it's the smartest thing to ask the partners themselves. Yeah, but this is definitely our mission, and in many ways we can transfer the know-how we have gained here in Germany with our promotional programs and actually transfer that, what is applicable, of course, to our partner countries.
Thanks, Barbara. Maybe, Admaso, since you just have been asked, maybe I ask you, which of these support you get from KfW as a green bank are popular with you at TDB? You don't have to say the ones which you think are very complicated. Maybe just mention the ones which you actually enjoy.
Well, you know, to be very practical, Rainer, I think we started in 2013 in this partnership with KfW, and we started with a $60 million line, and then that went to 100 million, and now we're looking at an additional line as well. But of course, that, as I was referring to earlier, was sort of plain vanilla long-term debt, which was, of course, what we needed at the time because we were still trying to sweat our equity and to scale up. But now, of course, we're in 2021, and we've grown our balance sheet approaching $10 billion. And now what we realize is we have another binding constraint, which is a combination of hybrid capital and equity. And the beauty of the offerings now that we're sort of sharing with our close partners is this is on a risk-adjusted basis quite attractive to a financial institution. And you don't have to be an evil bank to appreciate that, right?
It's not, as I said, it's not my opinion. I'm just like, already had a few discussions here with COP delegates who weren't so, where the banks weren't so popular with. Bastien, let me turn to you. You're here with me physically. You're Bastien Bedossa, you're head of the Financial Systems Division. You have been working as rating analyst for AfD and also macroeconomics analysis department. Then we worked for several years on the financial sector development in Africa, Asia, and Latin America. And you have managed AfD's portfolio on climate finance projects. So you're quite familiar for a long time with this topic. And AfD also has several instruments you use. So maybe please introduce them to us.
Yeah, thank you, Rainer. Good morning to all. Yes, maybe just to begin, in my division, we're working on financial systems. So financial system and financial institutions are not the evil. Obviously, they are, for us, in our opinion, one of the major actors of the low carbon transition. So we are trying to assess what are the needs of the financial institutions, what are the needs of the regulators, what are the needs of the different actors that provide support to financial actors, especially public financial institutions, as far as IFD is concerned. So I wanted to highlight three instruments that are three experiences we had with counterparts, with partners like TDB, obviously, to share with you three tailor-made instruments we try to structure to support the low carbon transition financing by local financial institutions. So the first one is the program called Transforming Financial System for Climate. That we launched with the GCF, the Green Climate Fund, in 2018. This is a very important program, more than 700 million euros, dedicated to support local financial institutions in more than 15 countries through loans, obviously, and technical assistance. What is interesting in this partnership is that the GCF come as a sub-participator to AFD green loans. So AFD is in capacity with this program to share risk with another lender, so to propose increased amounts to the financial institution to work with a large panel of financial institutions to take more risk. Also, this is very interesting for AFD. It is also very interesting for local financial institutions. They benefit from technical expertise from AFD, from local consultants. They benefit from funding, the funding that is provided with attractive conditions, and they benefit from international standards, criteria for mitigation, adaptation, to meet the GCF and IFD requirement. This is an important fact because, in my opinion, one of the role of the donors for supporting the financial institutions is to propose standard and to upgrade the internal processes of financial institutions. So the first step is this one: how to report, how to analyze, to assess a portfolio regarding the climate issue. The second instrument that I wanted to showcase is we've been asked by an African regional bank, member of IDFC, to support the issuance of its first green bond. We did it, and we subscribed to this green bond also. But what was the most interesting, in my opinion, was not the subscription, but the subscription is important to make, and Barbara told that, to make confidence for private sector investors. But we provide the bank with technical assistance before the issuance of the green bond, in order the bank to be able to screen its portfolio, to structure internal processes, to create committees, to report, to write out the first report of the green bond, to create the framework, and to recruit the independent second opinion that will assess the quality of the portfolio. This technical assistance was absolutely key for the bank before the issuance of the bonds. We observed, and this is maybe the different case when we provide a classical loan to green loan to a bank. Green bond needs process, needs internal transformation, needs a new risk assessment, new renewable of the commercial function of the bank, in order to make the process, all the process current and fruitful for the bank. So we subscribed to the bond, and I think it was a success, because these banks say that they will try to issue another other green bonds in the coming future. Finally, I wanted to highlight a third instrument. We proposed to a bank in Costa Rica, and it's a good answer to you, President Tadesse, and you say that risk capital is key now to make the local financial institutions growing and at scale to answer the demand and the challenge related to the climate issue. We proposed to this bank in Costa Rica the following instruments. So we provide quasi-equity to this bank related to climate impact. So what does that mean? It means that we provide a classic tier 2 loan to the bank, and in return the bank has to report on climate finance with a leverage effect. Precisely the leverage effect that it could make with its own balance sheet, and the fact that we provide a tier 2 loan to this bank. This is very interesting, because the bank had a very structured strategy dedicated to climate. They want to go further. They want to finance more projects. They are an important pipeline of projects in Costa Rica, obviously. So they want to, they ask how to finance this strategy, how to mainstream this strategy within the business model of the bank, and this green tier 2 green quasi-equity instrument was, in my opinion, the good answer to this bank. So the bank has the ability to leverage on these resources. We try to make it, to propose it at attractive financial conditions, to leverage on these resources to finance more climate investment now, but also in the future. And one of the most transformative effect of the instrument is that when you manage equity or quasi-equity, this is a scarce resource for the bank. So you have to redesign all the decision-making process within the banks to use these resources as the best way as possible. So this we had a very deep discussion with the bank. We have a strong technical assistance in parallel to make this possible. This is the first of its kind operation we structure as this green quasi-equity, but I wanted to share this experience with you because I think it was very, very interesting for the bank and for AFD too. So just a few words to conclude before leaving you the floor. My key message is that when we talk about innovative financing tools or instruments for green financing, In my opinion, we tell about internal transformation of financial institutions. When you mobilize funds, when you implement technical assistance, when you have to report, when you have to change your risk appetite framework, your ALM strategy, you have to change your internal process, your internal decision process from the top management to all the agents working day to day on the activity on the bank. So thank you. I will answer your question right now.
Thanks, Bastien. You insisted quite a bit, and you emphasized very much the necessity for the bank to change as a whole. Like I've been involved personally in technical assistance for 15 years, and I think that was also the goal 15 years ago, and it didn't always work perfectly. Let's put it this way.
Yeah.
What's changing now? Because my impression is also it's changing, but what's your thoughts on it? Why is this changing?
My opinion is that you cannot now finance green investment and have traditional activities besides. So, when you want to implement a climate strategy, you have to mainstream this strategy within all the bank strategy, within the business model. You have to demonstrate that this new business model, that this new market is interesting for the bank, for the investors. So you cannot have separately a discourse about climate and a discourse about the traditional banking activities. So you need to transform if you want to take part to the financing of a low carbon transition. And the fact that the low carbon transition strategy or long-term strategy is key also, because you have to manage, and we also support with development policy loans, reforms in the financial sector as a whole, and including with the regulators. You have to comply with new regulation. And in many countries, the regulation is evolving to integrate disclosure, specific objectives to finance the low carbon transition, net zero, going out from coal, etc., etc. So I think many of our partners, we are working with public financial institutions, especially development, public development banks, have understand that you cannot do so without transforming yourself in a deeply manner.
I'll get back to you in a second, Bastien. Barbara, since you're also working on the financial sector development, do you experience something similar, that there is now there is this necessity for this deep change within financial institutions to move forward?
Yes, I would definitely agree, and it also has to do with the options and the possibilities these instruments we introduced in this session have for the institutions, or offer for the institutions. Like, for instance, green bonds. If you want to issue green bonds, you have to adjust to a certain level of reporting in order to fulfill the regulatory standards. And that is actually also the reason why at KfW we have dedicated programs dedicated to either renewable energy or energy efficiency, supporting the green bond issues we have. Because then the reporting on these programs is rather straightforward, since the assets are homogeneous in the sense that they serve the program targets. And therefore, in order to establish such a reporting, certain steps have to be taken, as well as the mainstreaming of certain metrics in the financings. That takes a lot of adjustments in the internal processes, an adjustment as to the standards the institution has to adhere to, and you have to train management as well as staff in order to, so that they see what needs to be done internally. So I would definitely agree that the transformation of the institutions is key to get a transformation of the financial system, and that it's obvious basically. You know, once you say it, you realize that it's an essential and obvious step to be taken.
And that Masu, you're looking at it from TDB side. Which of your stakeholders, except for yourself, obviously, is pushing the transformation basically at TDB? Like, where do you see the biggest demand from your stakeholders there?
Good question.
Well, I'm glad this topic has arisen because sometimes this aspect around technical assistance is not adequately appreciated because the amounts are usually not as big, right? So the average long-term funding that we would get from one of our European partners would be about 100 million, and the tenor could be up to 20 years. So the volume is quite chunky, and when you look at the technical assistance part, it's under $1 million. It's $500,000 or so. But I think the value in it is that it is sort of a very catalytic type of instrument that comes in and actually helps you build up your system and your framework, so that you can actually not just absorb this kind of significant chunky money, but actually deploy it in a suitable manner. Because it's one thing to get the money; it's another thing to be able to account for it and to report on whether you've actually put it to good use. I mean, when I just look back at our own history as TDB, back in 2005, it's over 15 years ago when we actually formally adopted an environmental policy. But what we realized is it's one thing to have a policy, it's another thing to have an environmental and social management system that actually is well geared to collecting data and to reporting, to measuring, to doing all those things that, of course, is a requirement in today's governance world, especially when you have concessional funding being linked to taxpayer money. So I think generally we have seen ourselves adopt policies after policies, environmental and social management systems, and even sustainability frameworks now that account development impact in a much more detailed and fine-tuned manner. We weren't doing this over 10 years ago, but over 10 years of partnership with both KfW and AFD, we've actually put in place quite a few of these institutional strengthening interventions, and you can see it today. The footprint is very obvious within our institutional framework, and that's actually prepared us to attract even more funding. We are thinking, of course, of doing bonds like everybody else, but of course our lines, we've got so many green-themed funding already coming through. We just felt we should use that before we go out and raise more specific green money. But as I said, the constraint now is risk capital as opposed to just funding or debt capital. And I think, again, the positioning that we have now after all these years of partnership is that, we can make a very strong case to show that multiplier effect. I think Bastian made reference to the Costa Rica, where, you have to be able to demonstrate how you've leveraged that risk capital. And without the systems and the frameworks in place and all the data that needs to go with that and the collection, we're now well placed. And I think a lot of that would have been a lot harder if we didn't have the technical assistance over the years that came from two of our very strong partners, AFD and KfW.
Thanks. I would like to ask something also to Barbara and to Bastien. Can you see, or did you ever experience it, that some of the systems the partners in country have implemented in this regard? Because I can see a lot of dynamic there happening. That they feed back into your systems? So basically that this institutional change, which is happening, is actually coming back, that you at KfW, AfD would use it as well. Maybe where this question comes from is that we have worked with financial institutions in developing countries and have then used some of these experiences to work with financial institutions in Europe because they were just ahead, like put it simply, in terms of these especially environmental eligibility checking, environmental aspects, impact reporting. So could you also see that did you sometimes use that and have a feedback loop as well?
Yeah, sure. this is there is a reverse innovation process, I think, in regarding this this aspect. We have a strong driver related to our mandate as a donor. So KfW and AFD have strong mandate to finance climate finance, to comply with international regulations, European regulation especially. We produced our first TCFD report for a few weeks, for example, and all this expertise, and Barbara said that, are, in my opinion, very interesting for our peers, including in